The American dream used to be forged in steel and sweat. It was a story of a man building a house with his own hands, a factory floor humming with the sound of production, and a paycheck that actually held its value. In 1953, manufacturing drove the engine of our prosperity, accounting for 28% of the United States gross domestic product. But look around you today, and you will see a landscape that has shifted beneath our feet. That figure has plummeted to barely 10%. The once vibrant manufacturing hubs of the Midwest have become hollowed-out shells, silent monuments to an era when we actually made things. Between 2000 and 2010 alone, we watched 5.7 million manufacturing jobs vanish, leaving a void that was filled not by new industries, but by a cathedral of digital numbers and flickering screens. We are living in an era of hyper-financialization, a world where the middle class has been forced into a desperate gamble. Since we walked away from the gold standard in 1971, the US dollar has lost over 85% of its purchasing power. What cost $100 then requires over $750 today. Because the traditional path of hard work and steady saving has been eroded by this silent thief of inflation, people have abandoned the plow for the ticker tape. We see trillions of dollars flowing not into new machinery or sustainable agriculture, but into speculative real estate bubbles and digital assets like Bitcoin. We have created a class of middlemen, brokers, and exchange platforms that feast on the volatility of these bets, while the actual production of essential goods is neglected. The danger is invisible but profound. While the finance and real estate sectors now swell to over 20% of our economy, we are trading our productive capacity for an illusion of wealth. We are betting on the price of a digital code or the resale value of a suburban home while forgetting how to sustain ourselves. The haunting question we must face is simple. When the music stops and the screens go dark, what remains? If the value of these assets drops to zero tomorrow, we will find ourselves in a world with plenty of digital wallets, but very little bread on the table. This is the starting point of our investigation into whether we are building a future or merely inflating a bubble that is destined to burst. It has been over 15 years since the mysterious Satoshi Nakamoto released a digital ghost into the world's servers. At its birth, Bitcoin was hailed as a revolutionary tool for financial inclusion, a decentralized currency that would strip power from the banks. We were promised a world where you could pay for your daily needs without a middleman taking a cut. But a decade and a half later, the data tells a different story. According to studies by industry leaders like Chainalysis, a staggering 98% of Bitcoin's transaction volume is driven by pure speculation, with only about 1.3% of transactions actually used for commercial purchases of goods and services. The uncomfortable truth is that for the vast majority of people, Bitcoin has not become a currency at all. It has become a digital casino chip. Because its price can swing by 60 to 80% in a single year, compared to the 15% volatility of the S&P 500, it is practically useless for daily commerce. A merchant cannot price their inventory in a unit that might lose half its value by the time they need to restock their shelves. Furthermore, the dream of decentralization has collided with a harsh reality. Approximately 0.01% of all Bitcoin addresses hold nearly 27% of the entire supply in circulation. Wealth has not been distributed, it has merely been reconcentrated. Beyond the speculation, look at where the real money is being made. It is not in the hands of the small-town shopkeeper or the factory worker. The primary beneficiaries of this system are the massive exchange platforms and the armies of brokers who collect billions of dollars in transaction fees every year. They have built skyscrapers and private jets on the back of a technology that was meant to eliminate them. While we talk about the role of digital gold, we must confront the reality that this ecosystem functions largely as a high-stakes lottery. We are left with a ledger full of frantic transactions, but a world that is increasingly starved of actual utility and economic stability. The true cost of our obsession with digital assets and real estate speculation is not measured in dollars lost, but in things never built. When a society decides that flipping a house or timing a Bitcoin trade is more profitable than manufacturing a tool or growing food, it has entered a dangerous state of decay. Today, the Bitcoin network consumes between 120 to 150 terawatt-hours of electricity per year, an amount equal to the entire energy consumption of nations like Argentina or Norway. This staggering resource is spent not on heating homes or powering factories, but on maintaining a ledger that processes only 7 transactions per second. We are burning the world's physical energy to sustain a virtual casino. This shift has left the working class in a state of quiet desperation. The person who actually produces something, the carpenter, the machinist, the farmer, finds themselves at the bottom of the economic food chain. While financial services have ballooned to occupy over 20% of the economy, we have lost 5.7 million manufacturing jobs since the turn of the century. Our brightest young minds are lured away from laboratories and workshops toward trading floors designed to optimize financial arbitrage. Why sweat in a foundry or risk a harvest when you can make a year's salary in a week by betting on a digital trend? We are trading our engineering prowess for speculative algorithms. We are witnessing a grand decoupling of price from value. In this environment, the broker and the platform owner become the new aristocrats, while the producer becomes a relic of the past. But this is a house of cards. A digital wallet cannot fix a leaking roof, and a high-risk portfolio cannot provide a meal. By devaluing the act of creation and overvaluing the act of exchange, we are preparing for a future where we possess everything on paper and nothing in reality. When the day comes that the world demands real goods and finds only empty warehouses and forgotten skills, the true meaning of zero will finally be understood. The fundamental purpose of any currency is to act as a stable yardstick, a predictable bridge between the buyer and the seller. If you are a builder, you need to know that the money you receive for a house today will buy the same amount of lumber and nails tomorrow. But Bitcoin has failed this basic test of utility. It is a ruler made of sand, shifting and crumbling with every news cycle. While traditional assets like gold or the S&P 500 maintain an annual volatility of around 12 to 15%, Bitcoin swings wildly between 60 and 80%. It lacks the gravity required to anchor a real-world economy. Imagine trying to run a grocery store where the price of bread doubles by noon and drops by half before closing time. No business can function in such chaos. This extreme volatility has relegated Bitcoin to the fringes of commerce, trapped in a loop where it is too risky to spend and too unstable to accept. Proponents talk about its role as a hedge against inflation, yet we see that Bitcoin often crashes in lockstep with the very stock markets it was meant to decouple from. When the market panics, Bitcoin does not provide stability. It amplifies the pulse of the crash. The truth is that you cannot build a society on an asset that refuses to be boring. Real money needs to be reliable so that people can focus on their work, their inventions, and their families. Today, over 90% of Bitcoin's movement is merely buy and sell orders on exchanges, serving as a high-stakes lottery for brokers rather than a stable tool for producers. As long as it remains a ghost in the machine, it will continue to facilitate gambling while failing to facilitate the honest exchange of human labor. By chasing these digital highs and lows, we have lost the ability to price reality accurately, replacing a productive economy with a frantic, tattered illusion. The ultimate reckoning comes when we realize that we cannot eat a digital code or shelter our families inside a speculative bubble. When the screens eventually flicker and the fever of the marketplace cools, we are forced to look at our hands and ask what they are capable of creating. The path forward is not found in a more complex algorithm, but in a return to the foundations of human survival and dignity. We must rediscover this honor in production, the quiet satisfaction of growing food, the precision of manufacturing, and the structural integrity of building things meant to last. True wealth is not a number on a ledger. It is the resilience of a community that knows how to sustain itself. In a world where manufacturing has shrunk to 10% of our economic output, the real heroes are not those who time the market, but those who maintain the physical world. It is the farmer who understands the soil, the engineer who maintains the power grid, and the neighbor who trades a tangible skill for a tangible need. As the illusions of easy money through Bitcoin or real estate flipping vanish, a new space opens for a more honest economy. This is an economy where the producer is once again respected and where money serves as a simple, stable tool for the exchange of real human effort. In the end, the threat of everything going to zero is not an ending, but a profound clarification. It strips away the luxury of laziness and the vanity of speculation, leaving us with what has always mattered, our ability to work, our courage to create, and our commitment to each other. We may find that when the digital noise finally stops, the world becomes a much quieter but much more substantial place. The value of a society is measured by the goods it produces and the character of its people, and those are the only assets that can never truly be reduced to zero. This is the rebirth of reality, and it is where our true strength has always lived. Outro, the choice is yours. As we close this investigation, the question is no longer just about whether Bitcoin will go to zero. The real question is, what are we building today that will still have value tomorrow? We cannot change the global financial system overnight, but we can change where we place our focus and our faith. It starts with a shift in perspective. Instead of chasing the next digital peak, look for opportunities to invest in the tangible. Support your local producers. Invest in the education of skills that create and teach the next generation that true prosperity is grown in a field or built in a workshop, not found in a lottery. The greatest asset you own is not in a digital wallet. It is your capacity to be useful to the world around you. If you found value in this perspective, please share this video with someone who is searching for clarity in these uncertain times. Subscribe to join our community as we continue to strip away the illusions and rediscover the foundations of a real productive economy. Thank you for watching. Let's stop betting on the bubble and start building the future.